show in the morning because he is a smart analyst.
He's super. We love him. Having said that, we did want to draw everybody's attention to a story about Intel. It was up 2% in today's session. It's down now about 2%, but not as down as much as Supermicro. Ryan Fostelka writing about it and basically saying Wall Street losing its patience, and stock's been downgraded at multiple times and by multiple firms in the wake of earnings, making it the least like semiconductor company among analysts.
I'll tell you what, semiconductors in general, this morning when we were looking at the 1.5% rally on the S&P and a little bit stronger on the NASDAQ, Shanali said, hey, you know what? The SOX index, the semiconductor
wasn't every
index,
name up?
Yeah, they were all up. It was gaining 3.75%. So really ripping face. And now it's down 2.25%. So a complete turnaround for semiconductors.
Even on Intel, you're talking about over a almost 4.5% swing. Same thing on the SOX, right? And that just speaks to kind of some of the volatility in the markets. Real quick, Intel, you've got 7 buys, 35 holds, 7 sells.
And holds are weak. You know what? If you're an analyst, a hold, come on, get off the pot. You know, make up your mind.
I don't disagree with you. You either like it or you don't.
Exactly.
It's kind of my thing. All right, guys, that is certainly our look at 2 of the tech companies. This, as we are looking at equities pretty much near their lows of the session, down about 0.7% on the NASDAQ 100. World and national news we go. Off to D.C. and Amy Morris. Amy, take it away.
All right, thank you, Carol. Vice President Kamala Harris stepping up her efforts to bring rank-and-file union members in swing states back to the Democratic fold, this time with Minnesota Governor Tim Walz on the ticket. They're holding rallies in Wisconsin and Michigan today. United Auto Workers President Shawn Fain is expected to join them at a stop in Detroit. Wendy Schiller is director of the Alfred Taubman Center for American Politics and Policy at Brown University.
You know, they're clearly going back to the Democratic playbook, health care, reproductive rights, infrastructure, job building. She's shifting the playbook, and he's right there along with her with what right now appears to be no major liabilities within the Democratic Party.
This is all part of a 5-state blitz of battleground states that launched yesterday with a kickoff rally in Philadelphia. The National Transportation and Safety Board is hearing more testimony today. This is the second day of hearings into potentially inadequate manufacturing standards at Boeing. Yesterday, NTSB released public documents, including statements from Boeing workers, speaking of pressure to work too fast and a perceived lack of accountability for safety concerns. Summer Games in Paris continue this week. At last count, the U.S. has the most medals with 89. China has 61, France has 48, and the U.S. has the most gold medals with 25. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day on the S&P down 25 right now, right to the numbers. We're at 52.14, a drop of 0.5%. Dow Industrials down 192, also down 0.5%. The Nasdaq Composite Index down 110. For Nasdaq, a drop right now of 0.7%. Broad-based selling. We got the Russell 2000 lower by 1.3%. A swoon in stocks came after a weak $42 billion sale of treasuries, just underscoring the fragility of the market rebound in the wake of historic volatility. The 10-year right now 3.96%, the 2-year 3.99%. Gold down $3.50 the ounce, down 0.1%. West Texas Intermediate crude up 2.9%, $75.32 for a barrel of WTI. Earnings news: Disney shares down 3.1% this morning. Disney gave a mixed picture as it reported third quarter results. Weakness at its famed theme parks offsetting its first ever profit in streaming. Disney again lower now by 3.2%. Airbnb shares, they are plunging as well today, down 14.4%. In fact, the biggest ever drop for Airbnb after it issued yet another disappointing outlook and warned of slowing demand from U.S. vacationers. Airbnb down 14.4%. Recapping stocks lower, S&P down 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Matt Miller, who is in for Tim Stenovic right here on Bloomberg Business Week. I feel like we're sharing our war stories of being like, let go or almost let go.
Going through layoffs.
Through
it's
layoffs.
Tough when people
it's
have,
horrible.
pink slip parties puts too much of a positive spin on it. But
It's
that's when I first encountered real layoffs, because I started this job during the .com bubble burst.
And that's
I remember friends of mine were all sort of commiserating with each other over getting fired from their first jobs. Unfortunately, I was at Bloomberg.
Okay. Anyway, so that gets us to a story that is among the most read on the Bloomberg. It's a Business Week story by our WorkShift team. It's about the true cost of layoffs. It is, as I said, among our most read today. Let's get into it with Matthew Boyle. Matt, by the way, is Bloomberg News Senior Management Workplace Reporter. He joins us here in studio. All right. I am curious, though, why you guys are doing this story now. Is it because of some of the softness that we continue to see in the labor market?
No, Carol, I started work on this story 6 months ago.
Oh, you did?
Yeah, when layoffs were layoffs, when have they not been, coming hot and heavy, and just with Intel recently and Dell as well. But you see all these press releases, you read the memos from the CEOs, streamlining, efficiency, blah, blah, blah. And then the SEC filing goes out and they say, we're taking a charge of X million for severance. I'm like, okay, there's got to be more to it than that, right? What's the true cost of a layoff? Because I've been laid off, and we've, either you've been laid off or you've done a layoff. I think all of our listeners fall into one of those two categories. And you see what happens to the survivors, the people who are still there. They're like zombies at times. They're worried about another layoff coming. They now have to do the work of 2 or 3 people. So, your engagement goes down, your morale goes down. You're kind of looking out the door like, maybe I should be down the street taking a job somewhere else.
Yeah, a lot of other people
exactly.
just leave because
so
they're like,
we
listen,
know,
we're doing layoffs.
exactly.
I need to get out of this business.
So we know that output declines. We know that quitting goes up. But how much does this actually cost? We just kind of see these as like intangibles. Like, well, it happens, but, we had to do this. So I'm like, somebody must put some numbers behind this. So I dug around and finally found, I found an actuary at the Department of Labor. I found academics who have studied this. I found a guy who studied 200 layoffs and figured out how much did the quitting rate increase after the layoff.
Let's step back and first look at just the direct costs.
Sure.
Because you're talking about the whole ball of wax, right? But you lead your story with the Facebook firings, and I knew a couple of young people that Facebook brought over here from Europe to work, and then almost all of a sudden laid them off and sent them right back. They had great packages, and the whole thing was almost $1 billion, right? To lay off 11,000 employees, that's like $88,000 a person.
Exactly.
And that's just the severance, right?
Yeah. So I looked in their filing, and they said, well, after we $975 million or whatever it was in severance.
It's real money.
But it's not material because we're saving all this money. We don't have to give any of these people bonuses next year, and we're saving this or that. And I'm like, there's got to be, again, more to it than that. So, but all we really know is how much they take in the charge for severance, which will cover, 2 weeks salary, healthcare continuation, outplacement, help with your resume. But again, the cost of a layoff goes so much further.
So what are the biggest indirect costs?
Yeah,
you got to bring in, I guess, Bain or McKinsey to make you feel better about it first, right? So you got to pay
another cost. Yeah, there you go. No, Matt Boyle will do it for you. So the biggest ones are reduced productivity, output goes down. So I went to a firm called Active Track, and like other firms, so they're one of the biggest ones, they track employee activity. Now, we've all heard about, they're watching your hours, they're surveilling you, and all these stories about employee surveillance, but employers do want to know, what you are doing on the company time. So this company was able to track pre and post layoff productivity at 7 anonymous firms. Obviously, I don't know who they are, but we saw exactly what happened to productivity, and it was usually about an hour a day less productive. So that's 18 hours a month. Turns out to be, for every 10,000, for a company with 100 employees, that means more than $50,000 lost in productivity every month until it finally reverts to normal, usually after 6 months, but sometimes, not 6 months. So that's one of the big ones. Another one is increased quitting. People are worried about their own job, and so so you have an increase in what's called voluntary attrition, quitting. Now, companies always have a level of attrition normally. It's usually about 19%. So usually you are replacing 19% of your people just because they found something better in general. But when you do a layoff, your voluntary attrition can go up by 50%.
That's a lot.
That is a lot, yes.
Well, and I feel like on the other side of that, if you need those workers that are leaving.
Yeah, those are the ones you want to keep, exactly.
That to bring them in, to recruit them, then to retrain them, that's again another cost.
Yeah, so those are people you didn't want to lose in the first place. They're not the people you laid off. Then you have to recruit and train their replacements. So all that has a massive cost, and I was able to determine it. So you take a normal turnover rate, you figure out how much it costs to replace the people you lose, the increased incremental quits, as I was calling it, because it usually costs about 1.25x to replace a lost worker. So if you take, let's say, $65,000 average salary in the U.S., that's over $80,000 to replace them. Multiply that by the incremental quits. And at a 10,000 person company, you're talking about $75 million that you were not thinking you were going to spend to replace all these people.
I have to say, you sound like an accountant. I'm kind of loving this.
Well, I'm a history major, so no, this was all new to me. But
it's wild though.
I had people walking me through the math, saying, "Yeah, that sounds right," but I wish I could do it for a particular company. Get inside their books. That wasn't going to happen, so I just had to sort of guestimate and do back of the envelope.
I bet those calls went well. Hey, so and so.
Yeah, exactly. Hey, Meta, why don't you tell me what you're fixing?
You have also, obviously we all pay unemployment insurance tax, so the company pays that, and because when Meta fires 11,000 people, a lot of them are going to go on unemployment and start collecting money from the state. We all pay for that collectively, but it turns out the state wants a little bit more from a company that fires people the next year, right?
Yeah, I filed that under boring but important. Of course, your unemployment insurance rate is going to go up because you just put some people on unemployment. So guess what? So there, I've spent weeks finding this guy who used to be an actuary for the Department of Labor, who was so tired of getting that question from people. How much is my UI rate going to go up? He built his own calculator to figure it out because it varies state by state, and all these laws and the formulation for it goes all the way back to 1935, and different states do it different ways. Long story short, this guy actually put a calculator together. So I said, hey, what if you're a Texas company and you lay off 10% of your workforce? He's like, oh, just plug it in. Boom. There you go. Your unemployment insurance is going to go up by such and such $1 million a year. That's another one. Then there's the lawyers. Let's not forget the lawyers. You got to hire lawyers to make sure you don't get laid off, and if you don't get sued.
Right.
And you will get sued.
And you probably might get sued, but it might be a big, massive, ugly class action lawsuit, or it could just be one person who's like, how dare you, type of thing. But you have to analyze the demographics of the people you plan to lay off to make sure that no one group is disproportionately hurt.
It's not just a rash decision.
Unless it's just white guys.
Well, there are certain groups that, yes.
that.
I can't say that. I feel like that's fair, right?
And you do not want to get into a class action suit. So you have statisticians. So you got to hire statisticians. You can't just do this, on Google. You got to crunch the numbers, and you need a real number cruncher to do this.
You crunched the numbers for us, Matt.
We did.
So appreciate
it. Bloomberg, the story.
We did. Bloomberg News Senior Management Workplace Reporter. When we come back, we're going to talk about Tropical Storm Debbie, the story we have to do.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Super microcomputer shares plunging after reporting quarterly revenue and profit that missed analyst estimates, outweighing an annual sales outlook that was billions above Wall Street projections. Super Micro right now down by 20.2%, all part of a broader technology sell-off that we're seeing right now. Lows of the day with the S&P down 33, down by 0.6%. Lumen Technologies, based in Monroe, Louisiana, surging after full-year free cash flow forecasts from the telecommunications company surpassed consensus estimates. We've got Lumen up now by 29%. Both Goldman and J.P. Morgan upgraded their recommendations on the stock. Lumen up by 29%. The cybersecurity company Fortinet jumped after it forecast adjusted EPS that beat estimates. Analysts are positive about billings growth, and they note that margins were the strongest metric in the second quarter report. Fortinet shares shares, they are also surging today. Fortinet up now by just about 27.5%. Rivian Automotive is maintaining its full-year vehicle production target and profit-making goal. It is warning of a looming plant shutdown next year to prepare for a new vehicle launch. Rivian today down by 6.5% among some of the other EV makers. Tesla down now by 4.2%. Some of the other company stories that we're following for you at this hour: Lyft shares slipping by the most in more than a year after the ride-hailing company posted second quarter bookings and it issued an outlook that did fall short of Wall Street expectations. Lyft right now down by 15.5%. San Francisco-based rival Tesla down by rival Uber, I should say, up 2.4%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenbeck on Bloomberg Radio and Television.
All right, everybody, more Business Week to come in just a moment. First up, though, let's get another update on world and national news. Back to D.C. we go, and Amy Morris.
Thank you, Carol. Vice President Kamala Harris stepping up those efforts to bring in rank-and-file union members in Wisconsin and Michigan today. Wendy Schiller is director of the Alfred Taubman Center for American Politics and Policy at Brown University.
You know, they're clearly going back to the Democratic playbook: healthcare, reproductive rights, infrastructure, job building. She's shifting the playbook, and he's right there along with her, with what right now appears to be no major liabilities within the Democratic Party.
Now, the Trump campaign is also holding events in key swing states this week. Donald Trump's running mate, Ohio Senator J.D. Vance, is also in Wisconsin.
And not just that we could be doing so much better, we were doing so much better when Donald J. Trump was president of the United States. We had somebody who was fighting for American manufacturing, American workers, and fighting for their jobs.
Earlier, Vance visited a Michigan police department to talk about what he sees as failed immigration policies. The Summer Games in Paris continue through this week, and at last count, the U.S. has the most medals with 89. China has 61. France has 48 medals, and the U.S. also has the most gold medals now with 25. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week with Carol Masser and Matt Miller.
All right. Amy Morris, thank you so much. I love hearing the count. Are you watching the Olympics? I keep asking.
I'm not watching the Olympics because I don't know where I would stream it. Where do you watch the Olympics?
Peacock. And then I also...
That's NBC, right?
Yeah. It's their streaming. And then I also, I had set some stuff on the regular NBC network, their prime time, like at 9 o'clock, 8 o'clock or 9 o'clock it starts, because there's a couple things I wanted to watch.
Yeah, I would have liked to watch that Djokovic Nadal match for one thing, and then Djokovic Alcaraz. I'm so happy for Novak.
I know, it's pretty cool, right?
You know? Yeah.
Such a great player and stuff. You should go to the U.S. Open.
I definitely will be going to the U.S. Open.
Really,
I won't get the kind of seats that you get. But.
Well, you have to hang with us. What can I tell you? Let's get to one more thing. This is a story that you're like, we have to do this.
Well,
Hurricane Debbie. We know the storm. It's now, I guess, a tropical storm. Strong winds, heavy rains, a lot of stuff happening certainly in Florida, but it also
a lot of stuff blowing around, right?
Matt's gonna have fun with this one, guys. Let's see if you can guess what it's all about. Go ahead.
It gives new meaning to the name the Florida Keys.
Apparently, about $1 million of cocaine was swept up onto a Florida beach in the Keys.
Yeah, unbelievable. 25 packages of premium Bolivian marching powder washed up on the shore. Apparently 70 pounds. That's 70 pounds of blow. And how many keys is that? Let me look at the unit. So 31.75 actual keys wrapped in plastic, marked with red and black symbols, washed up on the shore, and somebody found it and returned it to the police.
As the police say, the drugs were discovered by a good Samaritan.
Who was really shaky and licking his lips a lot.
Stop that. I bet they were checking now where the package is open. We're trying to be serious, but it's just,
It actually is. You know what?
It's not the first time it's happened either.
No, it's happened before, and it's pretty amazing, I think, because it's kind of funny at first, but then it's not funny, because you think about whatever mule lost this or whatever smuggler lost it, he's in deep, deep trouble with the cartels.
That's where you go.
Yeah.
Apparently some bad weather also had driven some cocaine to wash up in Australia too, so.
Yeah.
It's happening.
It happens all around the globe. Cocaine is everywhere.
He's worried about the cartel. That's the view from
You get the
Matt
smuggler's
Miller.
blues. You know?
All right, if you're watching on TV, the close is coming your way in just a moment. Matt and I are going to continue on Bloomberg Business Week on radio. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, everybody, Bloomberg Business Week continuing on radio, YouTube, and Bloomberg Originals. And we've got equities pretty much at their lows of this session. So I'm not going to say necessarily selling into the close, but we are definitely well off our higher levels. You kicked off trading on TV, and it was a very different environment.
Yeah, absolutely. I mean, we had, not only did we have decent gains, big gains, 1.5% on the S&P 500, but it was a really broad rally. Just like yesterday, where every single industry group was up, we had 458 stocks on the S&P 500 rising this morning. So I thought it was going to hold. Then we got the auction, the Treasury auction, and that kind of turned things around.
Yeah, and right now, if you look at the S&P, kind of an even split, about 200 names to the upside, almost 300 to the downside, so more of a risk-off trade. Having said that, if you look at Airbnb, not a great day either, unless you're bearish on this one, plunging by the most ever. You also have some troubles at the Magic Kingdom. You've been talking a lot about that, so we're going to get into that in just a moment. And then Rivian, got to talk about it.
Yeah, Rivian missed sales by a smidge, really. I mean, we were looking for 1.17 billion, and they came out with revenue of 1.16 billion. But I think the underlying story is, if you're a hot new startup and you have a product that people are waiting in line for, you can't boast sales growth of 3.3%.
You got to get them out there, right?
You got to be doubling production, and they just can't do it.
Sleeping on the factory floor.
Yeah, exactly. Production hell.
All right, we're going to get into that, and we're also going to talk a little bit about kind of a different tone, geopolitical concerns. It's something investors have had certainly on their mind. We're going to get an update on what's going on in the Middle East. And then, as it turns out, there is a sample path to loving math and having a math mind. Do you have a math mind?
I kind of have a math mind. I'm excited to talk with this author, because I've always had this thing where I can kind of feel and see the solution to a mathematical problem in my head, but I have trouble going through the actual steps, showing my work, and that was always a problem in school, so I didn't really push that hard.
Do you see things?
Yeah, I see dead people everywhere.
All right, let's get an update on the trade. Let's toss things over to Charlie. Charlie, all yours.
All right, I thank you very much. From turnaround Tuesday to waning Wednesday, we've got stocks at the lows of the day right now. S&P down 23, 52.16, drop now of 0.4%. Dow Industrials down 183, decline there of 0.5%. NASDAQ lower by 100 points, down 0.6%. The 10-year 3.96% with a 2-year 4.01%. A swoon in stocks after a weak $42 billion sale of treasuries underscored the fragility of the market rebound in the wake of historic volatility. Following a surge of almost 2% this morning, we've got the S&P down by 0.4%. Spot gold down 0.1%, and West Texas Intermediate crude now rallying by 2.7%. WTI 75.12 a barrel. Next up for Wall Street tomorrow morning, 8:30 a.m. Wall Street time. Jobless claims. Mark Zandi is chief economist at Moody's, and right here on Bloomberg Business Week, he told us this number will be more closely watched than ever.
It had been around 200K. Right now, it's just south of 250K. Anything over 250K, yellow flares go off. Anything over 275 going to 300, then we got a problem. Recession looks more likely than not. So I'd watch that carefully.
Indeed. Number drops 8:30 a.m. Wall Street time. We'll have it for you right here on Bloomberg Radio. So again, recapping stocks trading lower across the board. Among earnings, Disney delivered a mixed picture as it reported third quarter results. Walt Disney Company shares, they're trading lower now by 3.8%. Airbnb plunging the most ever after the company issued yet another disappointing outlook and warned of slowing demand from U.S. vacationers. Shares of Airbnb right now, we got Airbnb trading lower by 14.6%. So again, recapping, S&P down 0.3. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You know how we said Supermicro was the worst performer, and I think both the S&P 500 and the NASDAQ 100. Number one decliner, well, the second worst performer in the S&P and the NASDAQ 100 is Airbnb.
Hang on, I'm writing this down.
Are you?
I'm going to use these with Romaine later.
Yeah, right, exactly. He's got to do his decliners.
Yeah.
All right, so let's get to it, because Airbnb shares, man, they are definitely selling off the most ever. They reported their third consecutive quarter in which it offered a downbeat forecast to investors, also warned of slowing demand from U.S. vacationers. So let's get into what you really need to know and what's the outlook. Bloomberg Intelligence Senior Tech Industry Analyst Mandeep Singh, he's back with us here in our Bloomberg Interactive Brokers studio. Doesn't feel good at all, but how do you see? Investors certainly don't like it.
Well, the guidance was weak, and in Airbnb, the risk for the longest time has been saturation. Even though this could be tied to macro and consumers slowing down, they talked about the booking window shortening because people are booking travel at the last minute. But when you think about Airbnb as a vacation rentals company, they operate in a market which is supposed to be much smaller than your overall lodging travel market, and that's the part that investors are not clear on. How much runway do they have in terms of taking share from traditional hotels? Because they clearly had some sort of a pull forward during the pandemic and in the couple of years after that, and now they're running into tougher comps. They're not acquiring as much supply as they were in the last 2 years. So it's really about what is it beyond alternative accommodations can they do? And they're still a single product company. So that's
So when you say saturation, do you mean basically everybody who was going to rent out her house on Airbnb already has rented out her house on Airbnb? Everybody who did decide to rent a few apartments and do an Airbnb business has already done that, and there's just not a lot of growth left.
Yeah, and also from a user perspective. So think of, how you segment the demographics who use Airbnb. Not everyone uses Airbnb, and I think what they're realizing is not everyone will use Airbnb just because there are certain people who will still prefer hotels. So the use cases for alternative accommodations are those high-end rooms for, larger groups. And that's where it gets used more and more. And
what you mean, like if I'm going to the Masters with 4 of my buddies, we rent some big McMansion right outside Augusta.
So that's the typical Airbnb use case. But beyond that, I think the corporate use case isn't there. And so they need to layer on new products. They have launched experiences, they have launched rooms, but nothing has really worked for them in terms of those incremental revenues.
So do they have to become more traditional, like a hotel company?
I mean, they did acquire a company, Hotels Tonight, but when people think about Airbnb, their branding is it's vacation rentals, alternative accommodations. And sometimes, it's good to have a brand because it saves you sales and marketing expenses, but also people associate certain type of, image. And that's...
How much of this is a problem with the consumer, Mandeep? Because we got a string of bad consumer earnings. Okay, we were reminded a little bit earlier that overall earnings season has been good. Overall, companies of the 470 who've reported so far out of 500, earnings are up 11%, 12% year over year.
80% beating expectations.
Yeah, well, they always beat expectations.
Okay, you're right.
But I'm talking about growth quarter over the same quarter last year.
Wasn't it 13%?
13% the expected final count, but right now on EA Go, I can see 11% so far. Anyway, it's good, right? But what we got yesterday with TripAdvisor, which is in a similar business, bookings are down. We got Airbnb, bookings are down. Disney came out this morning and said, you know what, not as many people are coming to our parks. They're getting Disney Plus and Hulu, but they're not necessarily taking the big plunge and going to Disney World. So is it the consumer that's really shaky here?
It is. And look, the trends are decelerating in terms of top line growth, in terms of estimate revisions. So in the case of Airbnb, you will see negative revisions for EPS growth in 2025. And that's where it's hard to sustain that kind of multiple. So if you're trading at the premium multiple, which Airbnb is, it's hard to sustain that multiple if your estimates are going revised downward. And I think there's nothing wrong with Airbnb. It's got a great moat. It's a great business. It's just that saturation aspect and the premium multiple is what's driving the stock.
So reset may be needed on expectations among investors. Having said that, Airbnb CEO Brian Chesky responded to the company's disappointing outlook and the plunge in the share price on X. He said, I'm confident it's a good time to buy.
He is?
That's what
Wait, so he likes his own company?
Shocking.
Amazing.
He should be announcing a big buyback. How about that?
Well, I mean, how much money do they have to play around? What's their cash flow look like?
It's a great business model, 30% free cash flow margin. So really, out of all the marketplaces, Airbnb is one of the better marketplace business models. It's a two-sided marketplace as opposed to three-sided. Three-sided, your margins are much lower.
And now you're confusing me, dude.
So
wait, two-sided. So wait, Uber, is that three-sided?
Uber is ride sharing is two-sided.
Two-sided.
The delivery is three-sided because there you have the restaurant, the delivery guy, and Uber. Whereas in the case of Airbnb, it's just the host and the guest, and they are the intermediaries. So
Thank you for explaining that.
Wait, I've never heard it that way. You mean you're talking about kind of like the touch points, basically?
Yeah, exactly.
Ah.
This is why we have BI analysts on.
I know. Well, this is why we have Mandeep.
Do you know what's
to,
a really
like,
cool
explain
function?
Everything.
If you're looking, if you want to know who covers Uber, you can type Uber equity and write BICI go.
And you know.
And you find the primer and you see the analyst and
I do
cool.
it differently. I just like pull up the ticker and then I pull up BI stories.
All right, that works too.
I guess so. All right. Anyway, very cool. What should we have on our radar when it comes to Airbnb? Like kind of keep going into, I guess, the next quarter or this current quarter?
I mean, look, all the marketplace companies have reported now. Uber had a good print, DoorDash had a good print, but the other ones didn't. And so it's more about, what sort of guidance we get from consumer-focused company. And don't underestimate Gen AI's application to marketplaces.
Oh, interesting.
Brian Chesky did mention a lot of the UI for these marketplaces, even for booking travel, will change as a result of generative AI. Now, if he shows something like that, I think that will be very exciting for investors to see that Airbnb is at the cutting edge of driving that change when it comes to leveraging generative AI.
All right, pretty cool. Pretty cool stuff. Thank you, Mandeep. As always, Mandeep Singh, Senior Tech Industry Analyst at Bloomberg Intelligence, joining us in studio. I'm just taking a quick check at Airbnb, which will be one of your decliners, I'm assuming.
Yes.
Down 14%.
So wait, what am I going to do? I'm going to do Super Micro.
Super Micro and Airbnb.
Do Airbnb.
And we'll pick out another one for you.
You know what I might do? Can I do the SOX index? Just the index?
Or yes, you could. Or
Thank you.
Or you could do Disney, which we'd like to talk about because Disney's down now about 3.6%.
Yes, let's do that.
All right, let's get to it because Disney also out with their results, and this is something you and I have been talking about. What it's saying about the consumer, because it looks like they're pulling back on parks, but they're streaming. Let's see what is going on at the company. But before we do that, because earlier on Bloomberg TV, the company's CFO actually joined the TV team. He is Hugh Johnston, and he noted that the revenue in the parks division was actually up 2% in the quarter. He pointed that out. It's still growing, he says, and yet
the lower income consumers are a little bit stressed and shaving a little bit off of their time at the park. And then higher income consumers are tending to travel overseas a little bit more right now. So we really just see this as a few quarters of slight perturbation in the numbers. Frankly, I think we're going to be right back as we get into the middle of next year.
All right, that's the CFO of Disney, Hugh Johnston, earlier on Bloomberg TV. Perturbation, I can't even say it. Perturbed? Yeah, I guess so, right? I don't know. All right, let's see what Chris Palmieri has to say. He follows Disney. He's Bloomberg News Entertainment editor. Chris Palmieri joining us in our LA bureau.
Disneyland.
He's at
Disney. Yeah, I'm perturbed too. Yes.
It's a great word. All right. Investors initially, well, no, they haven't liked it at all. Stock's still down about 3.6%. What do we need to know here, Chris?
Well, we're happy you are.
Well, this was obviously a surprise even to Disney because last quarter was a disappointment in the parks, and they said, don't worry, this isn't going to last long. And now they're saying, well, this actually could last for a few quarters. So attendance is flat. It's not like nobody's going, but they're not. The prices of everything have gone up, so their cost of labor has gone up at Disneyland, and so their profits are going to be down in the coming quarter, and it's just an overall softness, as the CFO said, in lower income consumers not going, higher income consumers going someplace else.
It's interesting, Chris. To me, I like to try and divine the macro through the micro, right? So if I look at this story and I see people aren't going to the parks as much because it's too expensive, but they are streaming more because it costs less and you can do it from the comfort of your own home. Is that like something that Disney's playing around with or talking about at all? Analysts talking about that?
They haven't said that that's not the dynamic, but the Olympics you guys were talking about earlier, they did mention that, particularly obviously in the Paris Disneyland, but that's something a lot of people were watching streaming on Peacock, and so that does take away from time people want to spend elsewhere. It's ironic that the parks, which had rebounded pretty nicely after the pandemic, and were really holding the company up are now the weaker ones. And the entertainment business, the film studio doing a lot better, the streaming business showing its first profit. That's now what's coming back.
Is the film studio just doing better because of Inside Out 2 from Pixar, or are there other reasons?
That's the big one. And then, of course, this quarter, the current one, they'll have Deadpool, and that'll be an even bigger, looks like, profit boost. So they've had a strategy since Bob Iger came back to make fewer films and focus on the winning franchises, it seems. I mean, they've had some duds as well, but with the films they've got coming out in the next few months, it seems like they've turned a corner.
We've been talking, though, a lot, I feel like, with our BI team and Gita Ranganathan about the importance of parks, though, and how important it has been top and bottom line. So to hear that there's some concerns, I feel like it was so reliable for such a long time, and it was kind of such an outperformer, Chris. So I don't know, what's the key takeaway of seeing, again, some weakness here?
Well, I wouldn't. Although it does mean a few choppy quarters. They're having their big D23 fan event at Disneyland this weekend. We expect to hear a whole lot of news about new parks attractions. Remember, they promised $60 billion in new stuff over the next 10 years. So whether it's an Avatar land coming to Disneyland in California or some other cool new attraction, I mean, it's a long lead time to build these things, but I have to believe the parks business will continue to be a good one.
It's so expensive, though. Correct me if I'm wrong, but I feel like I heard recently that the cost of a high-end trip to Disney, yes, John Tucker told me this recently, for a family of like 4 people is $40,000. Is that possible?
Well, not everyone travels at that budget. But yeah, no, it's very much particular, for middle-class folks. It's expensive. It's easily, you could spend $300 a person just a day going in there. But look at what other things cost. Look at what I'm not trying to defend Disney, but if you bought a lift ticket and the ski resort recently, I mean,
it's nuts.
That's the prices you kind of pay. So, and for the most part, it has helped them maintain the business.
Hey, Chris, are all their investments paying off? I bring this up because our producer, Elizabeth, gave me this story that's in the New York Times, and it's about a 4-hour-long YouTube video in which one woman describes her stay at a Disney World hotel. Jenny Nicholson, the spectacular failure of the Star Wars hotel. She apparently didn't love it. Talked about the cost.
4-hour-long video?
Yeah, we're going to have to
I wouldn't love that either.
But the point is, they are so good at taking their brands and putting it in the park, selling merchandise, making, movies and so on and so forth. But sometimes, I mean, they spend a lot to do it. Does it not always pay off? And we've just got about 35 seconds.
Well, that was the Galactic Cruiser was a spectacular misfire, no doubt about it. They built this $1 billion place and totally immersive environment, but they didn't have enough hotel rooms to make it really work, and that was the challenge. But for the most part, Disney's new rides are winners.
All right. I want to kind of stay there.
I can't wait
to take my daughter to Disney World. I have a brother who's a Star Wars fan. You know what? I didn't want to love it. And when I took my daughter, I had a blast. And when she turned to me, she was like 9 or 10. And she goes, "Mommy, wouldn't you want to live in a castle?" And I'm like, yes. Yeah. Chris Palmieri, thank you so much. Bloomberg News entertainment editor out there on the West Coast, out in L.A. All right, with everything going on, let's not forget the geopolitical tensions that are still very much a part of our world, the world at large, and the investment world. We tackle that next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Just getting word that consumer borrowing increased in June by less than forecast, reflecting smaller credit card balances. The Dow, the S&P, NASDAQ all declining. A 9-point drop now for the S&P at 5230, a drop now of 0.2%. Dow Industrials trading lower by 113 points, down 0.3%, while NASDAQ is down 60. For NASDAQ, a drop right now of 0.4%. The 10-year 3.96%, the 2-year 4.00%. Spot gold down $1.60 the ounce to $23.89, down by about 0.1%. And West Texas Intermediate crude oil up 2.9%, $75.33 a barrel on WTI. A swoon in stocks after a week $42 billion sale of treasuries underscored the fragility of the market rebound in the wake of historic volatility. Well, as for that market backdrop, Nancy Tengler is Chief Investment Officer at Laffer Tengler Investments.
We're having a sign made for our office that says volatility is the friend of the long-term investor, because historically, just look the last 3 years. In 2022, it made sense to add to holdings and add risk back into your portfolio, which is what we were doing. 2023, we got another summer swoon in technology and growth stocks in general, and now we're seeing it again.
Nancy Tengler of Laffer Tengler Investments. Lyft shares down now by 15.5%, down the most in more than a year after the ride-hailing company posted second quarter bookings and issued an outlook that did fall short of Wall Street's expectations. So Lyft is down 15.5%, rival Uber up by 2.9%. Recapping stocks lower, S&P down 15, down 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So much on the minds of investors, but I will say when we talk macro, this always comes up, geopolitics, and in particular, what's going on in the Middle East. And some news on that, Iran's president telling his French counterpart, Emmanuel Macron, that the U.S. and Europe must urge Israel to accept a ceasefire in Gaza in order to lower tensions in the Middle East. His comments hint at a diplomatic path to de-escalation as Israel braces for retaliation for the killing of a top Hamas leader in Tehran. This just one day after Hamas named the alleged mastermind of the group's October 7th assault as its new political leader, the latest blow to multilateral efforts to reach a ceasefire agreement in Gaza. So we wanted to look into the significance of this, what it says perhaps about the next steps in the war between Israel and Hamas. We turn to Bloomberg News senior editor Bobby Ghosh. He right now joining us from a conference in Austin, Texas. Bobby, good to have you here with us. Is the war winding down or winding up? It's hard for me, I feel like, to tell from day to day here.
Well, we are right now, Carol, in a sort of holding position. And as you said at the top, everyone's waiting for Iran's response to the assassination of the senior Hamas figure in Tehran from last week. And Iran's response could greatly escalate the violence. And so that's the general expectation. At the moment in the war between Israel and Hamas, Israel continues to reserve the right to attack Hamas wherever it sees fit. The damage to Gaza, it's hard to think that they could do even more damage, but they certainly can. The human toll remains very high, and there's always a risk of escalation. But what we're now seeing from Hamas is, with the appointment of the military mastermind as the top leader of the group, is a hardening of position. Hamas has always, or for a very long time, tried to maintain, the Israelis would call this a fiction, but at least try to maintain the impression that there is a political wing and there's a military wing, and that the two do not always work together. So the political wing is a part of the organization that can negotiate with Israel, that can negotiate with the United States, that you can actually maybe talk to these people, whereas the militant wing, which is the purely terrorist organization, those people are sort of beyond any kind of negotiation.
Well, but Bobby, I gotta ask, I don't know why anyone would think that this conflict is coming to an end at all, were it not for Anthony Blinken's constant insistence that we're close to a truce, because all I see is continued escalation. The Israelis have now killed 40,000 people in Gaza, 15,000 children, injured another 100,000 people, and they've assassinated leaders in, and I'm not making a value judgment on whether this is right or wrong. Obviously, they were attacked as well in a horrendous and disgusting way on October 7th, but they've assassinated leaders in Beirut and in Tehran. Like, it seems to me it's escalation after escalation, you know, tens and tens of thousands of people killed and lives, families ruined, homes destroyed. Why would anyone think that this is slowing down? Hamas has just named, allegedly, like the mastermind of the most gruesome terrorist attack since World War II to the head of its political wing.
Well, yeah, you're exactly right. I think the Biden administration and Blinken are indulging in more than a little bit of wishful thinking here. They are clinging on to some straws that some kind of negotiated settlement and peace is possible. There is some pretense of talks taking place with Egypt and Qatar trying to sort of herd the cats, if you like. But when you, as you say, if you make Yahya Sinwar the terrorist mastermind, the leader of Hamas, then all fantasies of a possible negotiation should go out the door. Sinwar is the man who was responsible for that terrorist attack. He's the man who's holding Israeli hostages. He's the one who stands in the way of Israel Hamas releasing those hostages. And on the other side, you have Bibi Netanyahu, who, as you say, constantly ratchets up the pressure from his end. On the ground, there's no indication of any possibility of any negotiation. As I say, we're in a holding position here. In this holding position, there are spasms of violence, and then there is a period when there hasn't been a 5,000 pound bomb drop on Hamas today. But that could change even while we speak. That's been the nature of this conflict since the 7th of October last year. And I don't see, frankly, any prospect of that changing. With the appointment of Yahya Sinwar, if anything, the prospects are fading to almost nothing.
All right. We appreciate catching up with you. Bobby Ghosh, Bloomberg News senior editor, with the latest on the Middle East situation. Having said that, we want to stay with this and bring into the conversation and welcome back retired Major General Mastin Robison. He's a geopolitical intelligence advisor at Academy Securities Advisory Board, joining us here on Bloomberg Business Week. General, you were listening to our Bobby Ghosh about the situation, and it does feel like, I agree with Matt, it does feel like constant escalation, even though Bobby said we're in a little bit of a holding pattern. How do you see it? How do you advise some of the clients of Academy Securities?
Well, I don't disagree with anything that was just said. I think there's some additional context, though, that is useful to add to it. Number one, in the last 2 decades, this is probably the most unified we've seen the Middle East with Israel and in opposition to Iran. That I think is curious. The April attack, 99% shot down, but a sizable contribution of that shoot down capability coming from Middle East countries that historically have not been necessarily, friends with Israel. I think what that says to me is Iran is dangerously close of further exacerbating their relationship with the Middle East and isolating itself more than it's even being isolated right now. I don't think it's any secret that most Middle East countries, not just Israel, consider to be Iran the number one aggressor and the number one threat to them and to democracy within the region. So I think you need to add that into the equation when you have this discussion. I also think it's interesting that there are many people whose calculus says that Iran's stockpile is not what maybe would it be to their advantage to do a large retaliatory strike at this point, particularly given the amount they used up back in April. So I think both of those play into the equation of how this plays out. We now have additional U.S. assets that have moved to the theater. I'm not suggesting they're going to be used, but I'm saying they do have an ability to have a de-escalation factor. To my knowledge, Iran does not have an ability to defend against the F-22. that have now been moved into theater. I'm not suggesting the U.S. would use them, but I am suggesting that the calculus has been altered as Iran tries to consider what should their response be. They need to do something to save face, but I think they have to be very careful this time around that they do something that doesn't exacerbate their position either as a nation with their people or with the rest of the Middle East or with the world. And the final thing I would say is that there's still a significant amount of diplomatic and sanction efforts that could be taken against Iran. And given Russia, in essence, already coming on board, at least verbally stating their counsel to Iran about civilian casualties or avoiding civilian casualties, I think there's a lot of room diplomatically across the world to say we're going to further and more deeply sanction Iran and Russia as well. That also needs to, I think, factor into the calculus.
You know, I was just thinking about that because we saw Israel assassinate the Hamas political leader in Iran last week, and I was surprised by the numbers, the sheer number of people that came out to mourn, this terrorist group leader in Tehran. I didn't realize that so many everyday Iranian people support Hamas. How do you think the administration could change its posture in a more aggressive way to hold back this country that funds terror through Hezbollah and apparently through Hamas as well?
Yeah, great question. But before I go to your question, since you brought up the deep strike, it really has to be not just intriguing to the world, but the fact that Israel has the ability to do such a strike so deep into the Iranian state has to have Iran going, wait a minute, where did this come from? There's no way they weren't caught by surprise on inviting him to a diplomatic a meeting with the leadership of Iran and not realizing that by doing so, they were putting him in a position of danger. So I would add that to the calculus of what you just said. Now, in regard to the people's response, that's hard yes, there was a large response, but Iran is a 60 million population country.
Right.
And there certainly are a sizable amount of people that the Ayatollah's network can influence and can stimulate. But I don't know that necessarily demonstrates that is the main Iranian response.
Forgive us, we do have to run, but glad we got some time with you to weigh in on the situation. Major General Mastin Robison, Geopolitical Intelligence Advisor at Academy Securities, joining us right here on Bloomberg Business Week.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. A lot of red on the screen. Slight bounce off the bottom. Emphasis on slight. Turnaround Tuesday turning into waning Wednesday. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That's right. U.S. stocks with a big reversal today. After a positive start, the Dow is currently down 117 points. Was up 480. S&P's dropped 17, while the NASDAQ is now down by 0.5%. The U.S. 10-year yield rises to 3.96%. Gold is down 2. Oil is in the green. And Bitcoin, that's lower by 3%. Among the main 11 S&P sectors, leaders were energy and utilities. Healthcare and consumer discretionary were under pressure. And leaders to the upside in the Dow, Apple and Procter & Gamble, while Amgen fell 6.5% after earnings and led to the downside. Also after earnings, Supermicro plunged 19%, Airbnb fell 14%, and Disney dropped by 4%. In other news, Disney said it paid $1.5 billion for a stake in Epic Games. And wrapping things up, some of the names porting up to the bell tonight include McKesson, Monster Beverage, and Robin Hood. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type squawk SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, got about 18 minutes left in today's trading session. Charlie, of course, breaking down the numbers. We're pretty much hovering near our lows here on the equity side of things. Carol Massar, along with Matt Miller, in for Tim Stenovic. Hello.
Hi there.
Hi there. Let's get to our guest. With us is...
I'm excited about this.
Okay,
and
so
you know why?
Take it away.
Because they're my bank.
I know. Is it really?
Chad Oviatt is here, Director of Investment Management, Huntington Private Bank. Full disclosure, that's where my family's been banking for generations.
Full disclosure.
And Chad, I got to ask you a question. After this insane week, that it feels like it's lasted a month already, but you're sitting at home in Upper Arlington on a Sunday afternoon, enjoying some Rubino's pizza and some Grater's ice cream.
Oh my God!
Just back
I
from
love
the
when you
Columbus
go
Country
down
Club.
memory lane.
That's hometown right there.
You've had the disappointing, unemployment numbers, and you open up the paper and you see that Warren Buffett has sold off half his stake in Apple. How worried are you about Monday morning?
Well, and then you throw in something complex like a carry trade unwinding, and how do you even interpret that as an individual investor at home?
Yeah.
And so what we're talking to our clients about is really, this is why you diversify your portfolios. One, don't be reactionary. There's a lot of reactionary forces in the market this week, and this is a time to evaluate why you have things in your portfolio.
Yeah.
But as bad as the discussion was around equities on Monday, bonds were winning. And so when you have that diversification, you have optionality. And so if you do have positions in your portfolio that make you a little nervous right now, this is the time to be trimming or adding. And so trim those that maybe aren't part of the long-term portion of your portfolio, and think about adding to some names that maybe give you different return streams.
You're talking about the equity side of things? Or
Equity side.
Equity side. All right, so give us some of that churn. So what would you sell? What would you buy?
Yeah, so look to be trimming some of the names that have been winning, right? Some of the technology names. We have, our equity team is really taking a barbell approach to risk right now in our portfolio construction. So technology absolutely deserves to be in the portfolio. Technology is not going to go backwards in terms of its advancements and what it can bring to us in the future. So that's our growth engine. But at the same time, you're looking at the volatility, you're looking at an economy that is, in our opinion, cooling, not cratering.
Yeah.
So now you start to think about what companies have historically rewarded their shareholders with dividends or buybacks, and who's in a position to take advantage of some of this market disruption. So we're looking at balancing some of the tech names with maybe some more of those dividend payers or things like...
So it's not a sector switch, it's a dividend or buyback play.
It's very much a security selection environment for us.
Okay.
And so we're looking for some of those high conviction ideas. And they can be, some of those household names, like an Ohio name, Sherwin-Williams, right? It has a history of a dividend that rewards investors for holding that security. Coca-Cola, if you want to go bigger global brand, same thing. They reward shareholders with dividends and buybacks, and they just have that brand recognition that should stay pretty constant. And those are not necessarily the antithesis of technology, but they're great complements.
Right. And I guess they can also, I can imagine how Sherwin-Williams and probably Coca-Cola too would employ AI to actually do something. I was talking to Nancy Tangler this morning from Tangler Laffer Investments, and she said she wants to look at old economy companies that can improve their productivity with AI, really digitizing their business, or I don't know how I don't know how Coke would do it, but Sherwin-Williams I can imagine for sure.
Well, and they're tied into the DIY as well as the professional lines of business.
Right.
And then you think about the housing market, it's been tough, but at the same time, if you look at existing home sales being as flat as they are, there's no inventory. That means people are staying in their houses.
Listen, I'm thinking about repainting. Like Matt, you were talking, right? You're probably like going to stay in your house for a long time.
Dining room color starts to look a little different, right?
There's a point where you start to rethink it. So when you think about, I want to go back to big tech for a second, though. Sure. When you think about maybe rebalancing or rethinking, how much do you pare back? How much do you still keep the exposure? Because we still live in a very technologically driven world, and while AI may have cooled a little bit, people are still talking about it.
And I think that depends on the individual investor and where they started. So for Huntington, our clients never really got to a full market weight in many of those names. We have risk controls in our portfolios that limit position sizes, and some of those names got to be beyond what our position limits would be for individual portfolios. So there's an inherent risk management in ours. So trimming and adding is different than somebody that went 10, 11, 12% into a particular name. So we're looking at opportunistically maybe even adding to a couple of those that have been really beaten down lately.
I mean, if you look at, if you're investing over the long term, right? If you're not a trader, and I imagine some people are trading with Huntington, but for the most part, you probably have people putting away money for the long term.
Yep.
You buy on dips. At least you dollar cost average in when you see that kind of correction, right? We were down basically 10% peak to trough on the S&P.
Yeah, that's exactly it. And for those, we've been telling our clients not to be overcashed, right? The one thing that we know for certain is that as interest rates start to go lower, whether that's because of market activity or Fed activity, cash yields are going lower. So if you have cash, be dollar cost averaging and look to those markets. Matt, you're absolutely right, where you can get in on some of those dips, be a long-term investor. And like we have a saying on our team, don't make short-term decisions with long-term investments, right?
Yeah, no, I get that. So if we get a recession? I'm trying to think about like being smart because markets do have cycles. We do have recessions. Things go down. There are corrections, and then there's something more systemic maybe in the markets. Are you concerned though about there's geopolitics? There's an election here.
Tell us about the economy in Ohio. I mean, that's the heartland, right? I mean, that is union country. How is it going with that consumer?
Yeah, actually, if you look at the states that Huntington is in, all but 2 of them actually have better employment statistics than the national average. And the 2 that don't, there's reasons why, and there's some great public-private partnerships that are helping to rectify some of those issues. But honestly, when we talk about the cooling versus cratering of the U.S. economy, if you were to really go all in on what happened on Monday, you basically are saying we think a recession is on the horizon and a bear market correction is also on the horizon. We don't think there's a case for either one right now. The employment numbers were a little weak, but we still added jobs. Manufacturing, weak, but service is good. And so there's this back and forth that and then you can look at the Atlanta Nowcast, 2.5 for Q3 on the GDP side. There are still some fundamental underpinnings that would suggest we're not heading to a recession, but this is where that optionality comes in. If you have a well-balanced portfolio and the market environment changes, the economic environment changes, you have some choices you can make.
I got a listener writing in with a question. Are you getting consistent questions from your clients? When Jack Nicklaus calls you, when LeBron James calls you, when JD Vance calls you, are you getting questions that we don't talk about here?
Yeah, and we've just got about 20 seconds.
Oh, great.
Sorry.
A lot of it is timing. Do I stay in? Do I get out? Or what should I be doing with my cash? And we covered a little bit of that because we do have people that have savings. And right now the interest rate environment is still good for savers, but you're going to have to make some decisions soon.
All right, got to run. Chad, thank you so much. He is Director of Investment Management at Huntington Private Bank, joining us here in our Bloomberg Interactive Broker Studio. Folks, we've got about 10 minutes to go in today's trading session, and we are pretty much hovering near our lows of this session. This is Bloomberg Business Week.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Airbnb now down by 15%. Airbnb plunging the most ever after the company issued yet another disappointing outlook and warned of slowing demand from U.S. vacationers. Bookings rose 8.7% in the second quarter to 125.1 million, but that was well below analyst estimates. Airbnb also said it expects sequential moderation of growth in bookings in the third quarter, too. Again, Airbnb down now by 15%. Disney out with a mixed picture as it reported third quarter results. Weakness at its famed theme parks offsetting its first ever profit in streaming. Disney's U.S. theme parks, which were buffeted by rising costs and tepid demand, missed Wall Street estimates for sales and profit. Disney right now down 4.4%. Geetha Raghunathan covers media stocks for Bloomberg Intelligence.
I think what is more disconcerting is that they expect to see kind of this lingering weakness in the park segment. So they're saying a mid-single-digit operating income decline again in the next quarter, and they expect the softness to last out a few more quarters. So obviously the consumer is not going to come back in a big way for at least another 3-4 quarters, and I think that is definitely creating some nervousness.
Geetha Raghunathan of Bloomberg Intelligence. Again, Disney now down by 4.4%. By the way, you can hear more of that conversation on the Bloomberg Intelligence podcast. Download it wherever you get your podcasts. Super Microcomputer plunging after reporting quarterly revenue and profit that missed analyst estimates, outweighing an annual sales outlook that was billions of dollars above Wall Street projections. But Super Micro right now down by 20.4%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, everybody. Just about 4.5 minutes left in today's trading session. We're going to head over to our TV colleagues in just a moment, count you down to the close on this Wednesday. Having said that, this story popping up on the Bloomberg, it's among the most read. JP Morgan Chase CEO Jamie Dimon, you've heard of him, right?
I have heard of him. Yeah, I just saw him on TV a little bit ago.
Yeah, me too. He said he's skeptical that inflation will return to the Fed's 2% target, citing risks including deficit spending.
Guess who else I think is skeptical of that?
Jay Powell.
Yeah.
Yeah.
I mean, they don't want to go back to 2%. They want to be in the direction of 2%, get close to 2%. They touch 2% and they'll be surprised.
But he cited deficit spending and remilitarization of the world. Yeah. I agree. I think that 2% target's a rough one. I also just think the demilitarization, global supply chains, climate change, these things are just going to keep costs. It's just different. I just think it's different.
We're building up such an incredibly large deficit that we are obviously going to bring rates back down again because we can't afford to pay it off if rates are high.
Or to make it so that we can keep.
Yeah.
I don't know. It's just kind of interesting. It's just something, to kind of roll into the mix. How are you thinking about this trade as we get ready to head over to our TV colleagues?
I am thinking it's so much more downbeat than I thought it was going to be this morning. And I guess I should have known because yesterday on Turnaround Tuesday, I said, you know what? These things don't necessarily last. We get a jump back up, but the volatility is still there. I just thought it was all about the unwinding of the carry trade. And if the Bank of Japan came out more dovish, that we wouldn't have to unwind it as much. Obviously, it's hard to measure. You never know how big it is. But
yeah. Don't you feel like, though, with all the conversations we had yesterday, and I feel like a lot today, that people were kind of rethinking, like blaming the carry trade? There's a lot of stuff, I think,
there's
coming
a lot
at
going
investors.
on, and I'm not saying that the drops we saw on Monday are all about the carry trade, but it's definitely a huge part of it, which
Absolutely
is why we had a 3% drop here, and in Japan they had a 12% drop, right?
Right, yeah.
The thing is, it's not all about the Japanese currency. We started talking about the Chinese yuan as part of the carry trade as well, so there are other currencies in which it's active, and
I think the consumers,
in which it's active.
I think the consumers are having a tough time.
And there's a difficult consumer issue here.
Yeah.
On the other hand, earnings have been great, and GDP is still strong.
There's this disconnect between really wealthy and those who are not. So that kind of bothers me a little bit. All right, folks, do not go anywhere. We're heading over to our TV colleagues. We're going to catch up with Alex, Romaine, and Scarlett. We're going to count you down to the close. The closing bell starts right now.
The The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here alongside Alex Seal. We're taking you to the closing bell with a global simulcast starting now. Scarlett Fu joining us in the TV studio, Carol Massar and Matt Miller in the radio booth as we welcome our audiences across our Bloomberg platforms, including our partnership with YouTube. Carol Massar, the turnaround Tuesday turning into a bit of a wobble on this Wednesday. Stocks now at session lows.
Yeah, right. Really interesting from how we started the day to where we are right now with just a few minutes to go. Having said that, you and I, Matt, have been talking a lot about the semiconductor space. Just the swing that we've seen, that group has been down more than 3%, and it's been up as much as almost 4%. So you're talking about a 7% swing, Scarlett.
Yeah, definitely. And I think it's notable here that we started to see equity indexes give up their gains well before the final hour of trading. Yesterday, if you'll recall, we had a swoon into the close. We still finished up, but definitely off our highs. Now we've completely given up our advances. And Quincy Cosby was telling us earlier that that's a real sign that this unwind has more to go.
Yeah, and that does, in many ways doesn't surprise me at all. JP Morgan Market Intelligence this morning had their note out, and I love this quote, you guys. They were saying that basically this was a sell-off that was coming. It was just disguised as a growth scare. And if that's the case, you can obviously say that there's a lot more downside to come then. We haven't really reversed that 200-day moving average for the S&P.
And as a lot of our guests point out, too, I mean, a lot of this might also be just profit-taking, good old-fashioned profit-taking when you consider the gains that we've had through the first few months of the year.
Yep, indeed. And you're taking a look at the indices really rolling over here. You're looking at the S&P off by about 0.8%. Now, to me, the question is, guys, what happens into tomorrow?
All right, well, let's talk about today for 1 second here as we get the closing bells in New York right across the screen, which is a big turnaround from where we were at the start of the session when it looked like stocks were set to rally 1 or 2%, closing lower by about 1% across the board. The Dow Jones Industrial Average down 0.6%, S&P down 0.8%, NASDAQ down more than 1% on the day, and the Russell 2000, Carol, going to close out the day lower by 29 points or 1.4%.
All right, so back to the big caps I go, as you know I like to do. Most names, guys, lower in today's trade by the end. Very different picture again at the open today. 358 names in the S&P 500 losing ground today, Scarlett, 144 to the upside.
Yep, and in terms of the 11 sector groups in the S&P 500, 7 of them are lower. Consumer discretionary, materials, and infotech leading the way down, each losing at least 1 1/3%. Your outperformers here are really your traditional defensive groups. Utility is up 0.5%. Energy gaining about 0.5%. Financials barely positive, and staples unchanged to barely positive.
All right, guys, to the individual gainers we go. This one, number one gainer in both the S&P 500, the NASDAQ 100. We're talking about Fortinet. It was up 25% in today's session, jumping as much as 27%, biggest intraday rise since about November of 2009. So quite a bump to the upside. Company forecasted adjusted earnings per share that beat estimates. Analysts also are really positive about billings growth and note that margins were the strongest metric in the second quarter report. Axon Enterprise, also a major outperformer, up about 18% in today's session, top in the S&P. Company makes tasers, they make body cameras, boosted its revenue guidance for the full year. Yes, the guidance beat the average analyst estimate, so some really outperformance. One more for you, Latham Group. Ticker, great tipper. Ticker is SWIM. Company makes and builds in-ground residential pools. It reported adjusted EBITDA for the second quarter exceeded even the highest estimate among analysts tracked by Bloomberg, so some really outperformance there, Matt. So
you ever been tased?
No.
Any of you guys ever been tased?
No.
It is a pretty interesting experience.
Why have you been tased?
I tased myself once when I was working as a security guard in a Russian disco in southern Germany, just to see what it was like.
It's coming in the Netflix documentary on Matt Miller. All of this will
Let
be
me get
there.
to the decliners here.
Me too.
Super microcomputer, the biggest decliner. And I think this is a fascinating sort of picks and shovels play on AI because the stock has grown so much faster than NVIDIA and now come crashing back down to about the same gains, but they had margins that disappointed analysts. So a big drop in super microcomputer today. Airbnb, the biggest drop on record, as much as 14%. The shares came down 13.4 there at the close because they had a disappointing bookings outlook. And then Disney, I think this kind of tells the story of the consumer, what we saw yesterday from TripAdvisor and Airbnb and Disney. Disney is that they're just not going out and making these bookings. They're not going to the parks as much as Disney would like. They did have people staying home and buying Disney Plus or watching Hulu, watching ESPN, but they're not seeing the growth that they want at the parks. So the real question, I think, from earnings over the last 24 hours is about consumers.
All right, guys, speaking of consumers, people watching Warner Brothers, let's get to their earnings just crossing the Bloomberg terminal. Adjusted EBITDA for the second quarter, $1.8 billion. The estimate on the street was $2.07 billion. Cash and cash equivalents, $3.61 billion. The estimate was for $3.21 billion. We did see the stock, initially I was looking at it in the aftermarket, coming a little bit lower. We'll bring it up for you in just a moment. What's interesting is what we really want to know about is them losing out on the NBA contract, that $76 billion deal that we saw that the NBA struck with Disney and Comcast and Amazon, and they're fighting that. Right now, you've got Warner Brothers down. Well, now it's unchanged, but we saw it down about 3.5%. They right now, Discovery, are suing NBA, though, for that alleged breach of contract.
Yeah, and it's interesting. We spoke with Jason Bazinet over at Citi earlier today. He actually doesn't think that the loss of that is going to be as damaging, at least on a financial basis. I think he said something like maybe $1 or so, maybe shaved off the bottom line, but he actually, on a per share basis, obviously, but he thinks that that will be recouped through other initiatives, cost initiatives that the company is taking.
Yeah, Warner Brothers shares bouncing around here from unchanged to down slightly following that $9.1 billion charge. A quick mention here of Duolingo, which is the company that provides software to teach languages. It has boosted its full year revenue forecast. The stock up slightly right now. Second quarter revenue for the period that ended, $178.3 million, beating the average analyst estimate. But again, that third quarter outlook does top the average analyst estimate.
I want to go back here to Warner Brothers. If you take a look at direct-to-consumer subscribers, they came in about 103.3 million. That's at the end of the second quarter. That was an increase on a sequential basis. But guys, their TV revenue is down 27%. Yeah, their theater revenue was up about 19%, but their TV revenue down 27%. And their cash burn was pretty, well, they repaid a lot of debt, actually. So they ended the quarter with about $3.6 billion of cash on hand.
Yeah, we actually heard this recently from a debt investor that the company, the shareholders are going to have a real problem, especially if they're able to do this spinoff. But he said he liked the company as a debt holder. Writing off your entire TV networks business for $9.1 billion is definitely not the kind of thing that you want to see if you're holding the stock, right?
Yeah, well, I mean, to be fair, it was sports and the ad market, so I guess it was a combo there. All right, just taking a look at Zillow here, you have revenue coming in at 72 million, I should say. That was definitely a pretty strong beat, and their outlook for the third quarter also coming in higher than estimated at the high end, looking at 560 million. In terms of an adjusted EBITDA, if you just look out to the third quarter, they're also looking on the high end of 110 million. So relatively solid. That third quarter EBITDA estimate, though, is a little light, even though the revenue is higher. The CEO, though, is stepping down, will be replaced by the current COO. So the current COO will be CEO Jeremy Waxman will be joining Zillow there at the top.
Yeah, that Zillow CEO stepping down for the second time, right? Like he's been trying to reinvent the company. He's been trying to grow the business, but it's been really difficult in that sluggish housing market. So you're looking at Zillow, though, nonetheless, up more than 5% here.
Let's go to Robinhood. The shares higher in after hours, trading by about 3.5%. Earnings across the wire right now. 2Q monthly active users coming in a little bit light, 11.8 million. The street was looking for 13.2 million. Though we should point out revenue did come in above estimates at about 682 million. Not necessarily seeing a forecast here, although the company does say its full year operating expenses will still be in the range that they had forecast previously here. But overall, it looks like assets in custody, whether you're talking about on the equity side or on the crypto side, beating estimates here. So did the bottom line. The shares higher by about 3.5%.
Take a look at Bumble shares if you want to know what happens to a company that cuts its full year growth forecast to almost nothing from 10%, right? Bumble had seen growth of 8 to 11%. Now they're coming out and saying revenue is going to actually just grow 1 to 2%. The street was looking for 8 and change. The shares dropped by about a fifth. No, about a quarter. Now, Bumble did actually have profit that beat in the quarter and revenue that was basically in line. They say they have 4.14 million users. That's also in line. Did you guys see the Ashley Madison documentary?
No.
See that?
No.
Not yet.
You should definitely watch it.
Okay.
Anyway, Bumble, they have paying users, more than 4 million, but they don't expect sales to grow more than 1 to 20%, and as a result, the stock is taken down by half, or by a quarter, I should say.
Okay, so in the press release, they say that we are resetting our guidance today to reflect actions we're taking to position Bumble to reignite user growth, deliver improved customer value, blah, 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 drive long-term revenue growth. I mean, you know, the usual happy talk, but resetting our guidance today, like you said, Matt, it's a pretty big reset to go from anywhere from an 8% to 11% to 1% to 2%. I mean, they did not give analysts any kinds of heads up if analysts were looking for 8.4% on average.
Free cash flow down 23% year over year. I mean, it's not a good trend.
I can't believe you haven't seen the Ashley Madison documentary.
Right.
None of you has been tased or seen the Ashley Madison documentary.
No, we're 0 for 2 here, Matt.
Putting it on the list.
That's a Matt Miller combination.
Get tased and watched the Ashley Madison documentary.
Right? Yeah, it is.
Exactly how I want to spend my Friday night. All right, that's a wrap, guys. Bumble down almost 30% here in the aftermarket. Warner Brothers down about 6.6%. Zillow, a gain of about 6.5%. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Alex is heading out. Scarlett and Romaine finishing up on television, and you and I are going to finish up on Bloomberg Business Week. Folks, we will see you again, though. Same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
All right, a lot of earnings after the closing bell. There was one, though, yesterday that we talked a bunch about, and that is Rivian. Investors had an opportunity to react to it in today's session. The stock finished down off its lows map, but still down almost 7%. Earnings about 24 hours ago. The company production target unchanged from last year, so sticking with it. With it.
They're only going to make as many vehicles this year as they did last year. If you're a new company, right, and you make an exciting new product, investors want to see growth. They want to see your production double. Sales only rose 3.3%. That's a problem that RJ Scaringe has to deal with.
Higher outputs coming next year, though, they did say.
Yeah, they said that, but the plans for the future look good. They're supposed to build a new factory in Georgia. They got a $5 billion injection from Volkswagen. They're building a new factory in South Carolina. So at some point, you expect production to pick up. I wonder, though, how good the vehicle is.
All right, we're going to talk about that, but you actually caught up with the chairman and CEO of Rivian and the founder a little bit earlier on Bloomberg TV. Here's what he had to say.
The Volkswagen partnership is something we're really excited about, but the focus of this is around leveraging our network architecture, our topology of computers, the topology of electronic control units, the ECUs in the vehicle, and then, of course, our software stack. It does open the door to other types of partnership and activities we could be doing with Volkswagen Group, but to date, the core focus, the singular focus is around our software and electronics technology.
So he's saying that because I asked him if Volkswagen was going to basically rebody a Rivian to make the Scout. You know, they bought the Scout brand and they're going to revive that awesome old truck. Or if, you know, maybe Volkswagen would be able to give them more production with their South Carolina factory. So I wanted to know more about that partnership. So does Hannah Elliott, my partner in Hot Pursuit.
Your other partner.
Yes, my other partner in my podcast, Hot Pursuit. And she has actually driven the Rivian. I have not. She's driven too. She joins us now from Los Angeles. Hannah, you drove, I think a couple of years ago, the pickup truck version of the Rivian, the R1T. Now they've made improvements to, I guess, the powertrain, the software, and they have given you a new R1S to test out. What do you think about their products?
Yeah, this is the R1S, the second generation, and in a word, better. It's better. Definitely, the technology is more seamless. We have a lot more luxury options, like a glass roof that you can make go dark if you want. We've got heated and ventilated front seats. We have actually better driving controls and ride handling, even though I still think that can be improved. So, in short, it's better. I don't think it's a perfect product yet, and it is really expensive. The R1S that I drove was about $100,000. And that's actually not the top of the line. That was closer to the entry-level side. So yeah, it's getting better, I would say. It's getting better. A good foil for those who don't want to buy a Tesla, maybe.
Interesting. I got to say, it looks like a kind of a Land Rover meets Suburban with cartoon eyes on it. I
love the design.
I like
its
that.
lights
I
in the
like that.
front. That's what it looks like to me.
Yeah.
Like you could put this
totally.
in, right? A little bit.
Well, it's got a signature look because
Yeah,
Hannah,
I
they're
know,
coming
I
out with
know.
other models, right? And they all kind of have that signature.
Completely. Of course, we have the truck, the R1T truck. We've got the R1S, which is the SUV. We've got the R2 promised and coming. So it's kind of, Rivian has decided that maybe they could be a foil for Tesla. That's, the Cybertruck is very polarizing in its looks, and the Model X has these gull-wing doors that really grab attention. So yeah, Rivian is kind of going maybe for a more quiet luxury, like Patagonia wearing style. Which I think is smart. They're cultivating their own buyers. It makes sense.
Does it matter though? Unless they can produce more, does it really matter? Like, you know what I mean? It's really cool to see what they're doing, but don't they have to make more cars?
Yeah, they really need to make more cars. We already know that they're pausing production in some of their factories. Unfortunately, they're dealing with supply chain issues. Of the 4 models that you can pre-order of the R1S right now online, only half of them or fewer are even being delivered. Only the dual motor. We're waiting for a tri-motor and a quad motor, which they're saying will have over 1,000 horsepower. So I'm really excited to test those and drive those, but they're not here yet. Now, Rivian will take your money if you want to pre-order them, but it's going to be like next year at the earliest before we see really a wider range. So yeah, they need to make more.
It makes sense that if you want an electric vehicle to fit your whole family that's made in America, but you're not like a MAGA man, then you may not want to get one from Elon Musk, right?
Yeah, and you know what? That applies to a lot of people, especially in California. I just read a really interesting opinion piece about that. Go ahead.
Yeah, but I wonder why it doesn't handle that well. I mean, recently I've driven the F-150 Lightning. That has a lot of power. It's very big and heavy. It handles well. The Kia EV9, we both like that, Hannah. It's a big family SUV that handles well and is heavy. The BMW XM, even if you don't like the styling or don't really understand what BMW is doing with it, it's very heavy, but it's got this active, anti-roll technology that keeps it flat around corners. Why can't the Rivian, why don't they have the tech or the design to make it work around the corners?
It's really disappointing. Of course, part of it is just physics. This is a 7,000-pound SUV. It's almost 80 inches tall. It's big. It's like a rolling battery. That's what it is. So some of it is just physics. But to your point, others have been able to control the roll and sort of this Frankenstein lumber that I really felt in the R1S. And it's too bad. Making cars is hard. If you have a company like Volkswagen that's been making vehicles for decades, they just naturally have better engineering than a company that's a startup that is coming from the tech background. So I think part of it is just experience, and Rivian is new at making cars.
All right, so bottom line, did you like it though? I know you look outside, you look inside. did you like the ride?
It doesn't drive great. No, no.
Okay.
A short answer, no. Give me the V8. I was in an old Resto Mod right after the Rivian, and it just felt a lot more fun to drive.
A couple of other oddities I thought. The sunroof thing is cool. So they have, a transparent sunroof at the touch of a button becomes opaque, which is, I think, interesting, at least technology.
Yeah.
But it doesn't have the kind of basic, if you walk up to your car with your key fob in your pocket, like every vehicle these days unlocks for you, and then locks when you walk away. What's the Rivian, how does that operate?
So this seems like a really small thing, and it kind of is because it's just an issue with unlocking the car, but it's a big thing because we have to unlock and open the door handles every time we want to use the product. And the thing is, you can either download an app to unlock the vehicle, or you have to carry around a key card and sort of this plastic pouch, which you wave on the door handles, and then they sort of pivot out from the side of the vehicle. There's a little bit of a delay. You have to hit the card just right on the side of the car. It's not intuitive, and the car doesn't recognize the key, like you said, as you walk up to it. It just is an example of this technology is not solving problems. It's not any quicker. It would
Not
just be
doing
better to
that.
have a normal door handle.
I just want to walk. I just want to open it up
Yeah.
at this point,
Yeah.
right? Just want to do that.
Did I mention that Hannah and I have a podcast together?
I believe you did.
It's called Hot Pursuit. We release a new episode every week. You can download it on Bloomberg.com or wherever you get your podcasts.
Bloomberg News auto columnist Hannah Elliott out there on the West Coast. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Lots of earnings after the close of trading. Warner Brothers Discovery, the parent of CNN and TNT, posted a second quarter charge of $9.1 billion after writing down the value of its traditional TV networks. After hours, we got Warner Brothers down by 7%. Bumble shares, the dating app, plunging after it slashed its annual revenue outlook. After hours, we got Bumble down now by 22%. Ripple Labs has been ordered to pay a $125 million penalty in an SEC case. Stocks move lower today. The Dow, the S&P, NASDAQ all ended in the red. S&P today down 40, a drop of 0.8%. This after an initial pop of 2% or more. Dow Industrials down 234, down 0.6%. The selling continued for NASDAQ, down 171, a drop today of just about 1.05%. 10-year yield 3.95. 0.95% with a 2-year that's yielding 3.98%. Spot gold down $6 the ounce, a drop there of 0.3%, 23.84 for an ounce of the precious metal, while West Texas Intermediate crude up 3%, 75.36 today for a barrel of WTI. So again, recapping here, the Dow, the S&P, NASDAQ, Russell 2000 as well, all finished in the red. S&P today down by 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Masser, along with Matt Miller, in for Tim Stanovic, live here on Bloomberg Business Week. The math performance of U.S. teenagers, you might be surprised. You're not going to be surprised. The math performance of U.S. teenagers, Matt,
is bad.
Has sharply declined since 2018. Scores lower than 20 years ago. American students continuing to trail global competitors. There were some results that were a key international exam. It was released, I think, late last year. And in the first comparable global results since the coronavirus pandemic, 15-year-olds in the U.S. scored below students in similar industrialized democracies like the UK, Australia, and Germany, and well behind students in the highest performing countries such as Singapore, South Korea, and Estonia, continuing an underperformance in math that predated the pandemic. In other words, U.S. students
Estonia,
are really lagging.
huh? I know. Those guys are killing it in math.
Are you having fun with this?
Have you ever been to Estonia?
I have not.
It's a very small country.
I know, but they're doing well in math.
It's like saying Bergen, New Jersey is doing well in math.
Bergen
Guess
County.
what? Scarsdale does really great in math.
All right, so let's get to it. Our next guest says there is a simple path to loving math. I actually love math. Joining us is Shalini Sharma. She is CEO and co-founder of the nonprofit educational software organization Zern. Her new book, Math Mind, The Simple Path to Loving Math, Cracking the Numeracy Code for Everyone Who's Ever Thought They Were Bad at Math. Have you ever thought you were bad at math?
I have an issue that I want to talk to Shalini about, so I'm glad you booked her.
Okay.
But why don't you go ahead? You
All right.
start.
Shalini, welcome. I can't tell you how much we've been talking in the newsroom about who's good at math, who isn't bad at math. We have lots of questions. You start your book, full transparency. You write, the first thing you should know about you is that you're not a math prodigy. And then you transferred in 6th grade. You got placed in honors math, noticed something upon walking into the classroom. Tell us about yourself. Walk us through that moment in time and just share with us a little bit.
Yeah, well, thank you so much. I'm so excited to talk about all kids loving math. I was not a math prodigy, and I had a accidental and lucky experience in 6th grade that changed the trajectory of my life. My math teacher, Mr. Snyder, he just decided to believe in me when I didn't believe in myself. What had happened is I was in a math class in 6th grade. It was honors math. It's the first time I experienced that the boys were thriving and the girls were quiet in the back. There weren't actually very many girls in the class. There were more boys. And I was just barely holding on. I remember there was a point where I took a test. Mr. Snyder called me to his desk. My stomach dropped. I went over to his desk and I saw less red marking than usual. And he said to me, you did better on this test. And if you try your best, you could be just as good as the boys. And I know in 2024 that we don't think that's a good thing to say to a little girl, but I will tell you that my heart exploded because it was the first time I considered that I didn't just have to survive, but that I could excel and I could be the best. And it started this powerful chain reaction. And I wasn't born one, but I made myself a math kid. And I came to love math, and it's because of that moment.
I had also some really great teachers that I'll never forget. And I never thought I was that good at math. I was very dyslexic. I had a bad memory for, times tables in, 1st and 2nd grade or whenever you do that. But I get to 8th grade and I get this algebra teacher at the Columbus Academy, Tim Hildreth, who just really made math seem more fun, like an art or like music or like it was creative, as you write in your book. And he connected with me in a way that was cool. And the problem I have is that I can always visualize the solution. I can feel how the problem should work out, and I can get a lot of the answers right. I'm not good at the formulaic showing your work, and I never have been. So I wonder if that's a common problem.
Yeah, I mean, so much in there. So think about reading. If, for example, let's say we were all going to take a reading test, but none of us knew how to read. We didn't know that, each letter represented a sound and that you could put the sounds together and make bigger sounds. Like we didn't know that. But you showed me a bunch of symbols and you said, when these symbols are together, that means the word house. When these symbols are together, that means the word radio. And so there was a 200-word test. I crammed it. I memorized all the words. I even got an A on the test. But because of how every human brain works, every adult brain, every kid brain, I would start to forget that. And so 2 weeks later, even though I got an A on the test, I would forget how to read. And so think about how terrifying and insane reading would feel if we taught it that way. And so what you're talking about happened to you in your 8th grade class is that the symbols and the meaning came together. So what math really is symbolic notation to describe the real world around you. That's actually all it is. And so when you see pictures and visuals, then you get to connect that symbolic notation with reality, and then it sinks into the brain and it becomes durable. And that's just the science of how our brains work. So if you're teaching, let's say, a 7th grader about negative numbers, you can teach them all these rules of when you multiply a negative times a negative, it's positive. When you subtract a negative from a negative, you can give them a table and they may cram it, but they're going to feel really stressed. But if instead you say, okay, think about negative numbers as you dive into the ocean and you go deep into the ocean, and that's negative numbers. Get back up to sea level, that's 0. And then you climb a mountain, those are positive numbers. Now let's lay that out in the number line. And so if we see the number -5, that is the position of the number on the number line. Now start playing with the numbers. And that's what's often missing for kids, is that making sense. And the kids who love math, perhaps maybe Carol, they're doing that in their heads. Either adults showed it to them, they figured it out themselves, they read the textbook, however they figured that out, but they put the symbols and the pictures together. And one of the main things we can do to help kids love math is always offer them those pictures proactively.
You know, it's funny. One of our producers, Cece, she's like, I want to read this book. And she even said in the newsroom, I think I had a question here, but like, can you help adults enjoy math and have kind of a math mind? Having said that, I grew up, there's a lot of memorization and a lot of like doing problems and a lot of that. And I feel like the focus wasn't so much on how you got there, just get there and get the right answer. I mean, can an adult learn to love math and be better at math?
Yeah, definitely. And I think we as adults all kind of have to, for 2 reasons. One is if we're parents or aunties and uncles of kids, if we love math, we will help them love math. And so it's kind of our duty to help kids. But the second is, in the world that is, kind of manifesting in front of us, the need for numeracy, it's just off the charts. And, there's a lot of attention paid to literacy, but it just really pains me that there's this prevailing misconception that some kids are destined to be left behind and they can't do math, or some adults can't do math. And more, we see that means they can't participate. And that means even participate in like understanding your show. You have such an interesting show, but you're using a lot of mathematical terms. And so we want people to be able to participate. But yes, I think there are 4 steps to building a math mind, and I think they pertain to anybody.
It's like the race when you're at the, at the end of a dinner and you're like, okay, are we going to give them, you're out to dinner with a bunch of friends, like 15, 20%. Okay, like everybody's like figuring it out. And it's like, who could do it so like fast? I don't know.
When we were kids, it was 15 to 20%. Now they want like 20, 25, 30.
It's a little different.
You say that there are roadblocks for adults and for kids. What are the sort of hurdles that we need to overcome? What are the common issues?
Yeah, so the first is just believe. You open the show at the top by talking about the United States versus other countries, shared some love for Estonia. And what's happening in those countries is, and it might seem so simple, but it's a big deal, which is in those countries, people start with the belief that kids can do math. So, the simple parallel I give is, imagine if we put all our kids in this country in kindergarten through 8th grade, And at the end, they came out and we gave them a test, and we thought the test was really high quality. And at the end of the test, the majority were illiterate. The majority couldn't read. We'd be scandalized. And what if, even worse than that, a bunch of adults said, that's okay, they're not reading kids. We get very mad at the adults. But that's the exact same thing we're doing in math.
Yeah, hang on a second, because we have to take a break and do some news. And I want to talk to you about that, because I really don't love when kids are like, honors math, this math, because I think you send a message that a kid can only do certain things. Anyway, we're going to come back with Shalini Sharma. She's CEO and co-founder of Zern, her new book, Math Mind. We're going to continue this conversation. First up, though, a lot going on in the world and certainly around the nation. Let's get to it with Amy Morris in D.C. Amy, all yours.
All right, thank you, Carol. Vice President Kamala Harris stepping up her efforts to bring rank-and-file union members in swing states back to the Democrats, this time with Minnesota Governor Tim Walz. After their first joint rally in Philly last night, Democrats Harris and Walz have two more today. They are right now in Wisconsin, in Eau Claire, Wisconsin, and then Detroit, Michigan tonight. Bloomberg Government's Jonathan Tamari.
Democrats are going to have to drive up the vote in the urban areas in those swing states, even as they try to win back some of the more rural voters. This is really his debut as a national figure. And can he really reach some of those voters who might not typically be Democrats?
And the Trump campaign is also holding events in key swing states this week. Donald Trump's running mate, Ohio Senator J.D. Vance, also in Wisconsin.
And not just that we could be doing so much better, we were doing so much better when Donald J. Trump was president of the United States. We had somebody who was fighting for American manufacturing, American workers, and fighting for their jobs.
Earlier, Vance visited a Michigan police department to talk about what he sees as failed immigration policies. Ocean temperatures at the Great Barrier Reef reached the highest they've been in 400 years over the past decade. Research published in the journal Nature shows how researchers from Melbourne University in Australia were able to compare recent ocean temperatures to historical ones. They found mostly stable temperatures before 1900 and steady warming from 1960 to 2024. They were significantly higher over the past decade when mass bleaching took place at the reef. Summer Games in Paris continuing through the week. U.S. now with the most medals at 94. China has 65. France has 49. The U.S. has the most gold with 27. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on shares of Warner Brothers Discovery after hours, down now by roughly 7.5%. The parent of CNN and TNT posting a second quarter charge of $9.1 billion after writing down the value of its traditional TV networks. Again, WBD, Warner Brothers Discovery after hours, down now by 7.4%. Zillow Group CEO Rich Barton is stepping down from the top job at the home listings company for the second time, with his latest tenure defined by an ill-fated attempt to reinvent the company, and more recently his efforts to grow the business despite a historically sluggish housing market. After hours, we got Zillow Group trading higher by 5.5%. Turned out to be another down day on Wall Street, with the Dow, the S&P, NASDAQ all declining today, this after an initial jump. S&P 500 index down 40, a drop of 0.8%. We had the Dow Jones Industrial Average down 234, down 0.6. Again, the S&P down 0.8, while the NASDAQ Composite Index today did decline as well by just about 1%. 10-year yield, 3.95%. The 2-year yield, 3.97%. Spot gold today moved lower. Today we had spot gold down 0.3%, 23.82 the ounce, while West Texas Intermediate crude was up by 3%, 75.42 for a barrel of WTI. So, how to invest in this market? Chad Oviatt is with Huntington Private Bank, and he was a guest today right here on Bloomberg Business Week.
We've been telling our clients not to be overcashed, right? The one thing that we know for certain is that as interest rates start to go lower, whether that's because of market activity or Fed activity, cash yields are going lower. So if you have cash, be dollar cost averaging and look to those markets where you can get in on some of those dips, be a long-term investor. And like we have a saying on our team, don't make short-term decisions with long-term investments.
Chad Oviatt with Huntington Private Bank, again recapping S&P down 40, down 0.8%, 10-year 3.95%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to our guest. We're talking with Shalini Sharma. She's CEO and co-founder of Zern. It's a nonprofit educational software organization. Her new book, which is what we're talking about, is entitled Math Mind, The Simple Path to Loving Math. And
by the way, can I just say one thing?
You can say whatever you want.
We were talking at the top about how the U.S., obviously, U.S. kids in general aren't doing great at math compared to the kids in Singapore.
Yeah.
And then you mentioned Estonia.
Yeah.
And I made a joke about how small. I want to point out that I do love Estonia. Okay. I went there for an ECB conference to Tallinn.
Yeah.
I stayed at the Hotel Telegraph, which was beautiful.
So you're giving it some love.
The downtown is very nice. I would, as a tourist, go back just to hang out. So I just want everyone from Estonia to know I do love you.
Because we get hate mail, or Matt gets hate mail.
And it's cool that they're great at math.
I want to go to chapter 12. You say math matters for everyone, but we act as if it matters only for a select few. Our education system is built around both overt and quiet classifying of students, what you have referred to as sorting. We track classes. I grew up where it was like kids were in honors math, kids were in regular math, kids were in math that needed help. And it was like you were remedial. Definitely, I know, like I don't even want to say it. And it really put you in a certain way. And I hope my daughter's not listening, but she was in a point where she thought she wasn't good in math and got a tutor, and she actually is really great in math and loves it. And so it's just, but she got it in her head that she wasn't great. I really hope she's not listening.
She's not.
She will hate me forever. But anyway, what we do in the U.S., what's wrong with what we do in the U.S. and how we teach math? Because there was something, I saw a video where you talk about math wars, something the U.S. does but other countries don't.
Yeah. So like your kid and millions like them were at the top of my mind when I was writing Math Mind. And we have a system, and it's a strange one, where we actually spend billions of dollars educating millions of kids by sorting.
Yeah.
So we're trying to find the math kids, not just teach all kids math, which is what is happening in other countries. And kids aren't dumb, right? So you can say whatever you want, put nice things on posters, like, making mistakes is okay or whatever, but they know what's actually going on. And what's going on is that the way we teach in mathematics is it's a test to see if you have that rare genetic material to be able to do math. And every day you can fail the test. So by the way, even kids who are in the honors class, they're not feeling really good either. Everyone is feeling uncomfortable. Everyone is feeling like there's this scarce, rare genetic inborn material, but it's completely not borne out in science. Babies as young as 2 weeks old understand quantities. Pigeons can count, so can dolphins. And so we just have to relax because we can all do math. And what I'd say is that doesn't mean that kids who have a deep passion for mathematics shouldn't be able to accelerate ahead. If you have a deep passion for writing or journalism, you should be able to accelerate ahead. But that doesn't mean because you accelerate ahead that I shouldn't get to have really fun and challenging writing opportunities. And so we don't have to put those things in opposition. And we don't in other fields of knowledge, but we just do it in math. I would just say it's crazy, and we could just all stop.
I want to know what the system is that you developed or that Zern developed. I read that you guys have a system that 1 in 4 elementary school kids use, and I don't know, like half of middle schoolers use, which made me curious. Like, what is it? What is it, like a program? Do you have materials for teachers? Is it like tricks? What is it?
Yeah. So it's 1 million middle school kids, but those are the way I'd like to think about Zern. There's a really famous mathematician who describes our problem in middle school math in America, and he says kids walk out of class every day like 10 to 20 minutes behind in terms of confusion. Now, we make that a big catastrophe, but that's all. They're just 10 to 20 minutes behind. And if we could support them in their homework or with just 10 to 20 minutes of additional input, then they would get it. It would click. You get that aha moment in your brain. And so think of Zern as that digital complement. It's the 10 to 20 minutes every day for teachers or for families. And on Zern.org, it's free for teachers or families. And so we provide that 10 to 20 minutes. I think some of the secret sauce of Zern is the pictures, GIFs, visualizations. When we're teaching, so for example, when we're teaching a fraction bigger than 1 whole, so 8/4. Like, what does that even mean? On screen, the teacher will cut 2 oranges into fourths, and you can see, well, it's 2 oranges, and they're cut into 4 pieces, so there's 8 pieces. And so it moves it from really abstract, like no one really knows what 8/4 means in 3rd grade, to being extremely concrete. Everybody understands 2 oranges cut into 4 pieces. And so that's how we're trying to support kids.
Shalini, I wonder, AI, artificial intelligence, do you think that's going to be a good or bad thing for the world of math and kids?
Do we need math? We have iPhones.
And we've talked with Sal Khan about a lot of this in terms of what he's doing. And
I was just going to ask, is the Khan Academy like a competitor? Or, I mean, you're not for profit, so what do you think about that?
Yeah, I mean, so I would say there's only 2 sites I have 13-year-old twin boys, only 2 sites I let my kids on, Khan Academy and Zern. And I know Sal's kids have played with Zern. And I think it's really outstanding. And he does similar things with visualizations and videos. And we're both nonprofits just trying to put the best education we can up online for free for everyone. I think that with regard to AI, I don't know. I have no expertise and no ability to predict where the world will go. But I'll say this, which is it makes it seem like math is more important. And the reason for that is like in today's world, the single biggest predictor of getting through high school, into college, graduating college, and then having a massive effect in the sum of millions of dollars on lifetime earnings is algebra completion. Just that, algebra completion in your K-12 experience. And so if that's what's happening today in the world of jobs today, think about what happens in the future as numeracy and math skills become more and more expected and more part of every job. We already see STEM jobs mixing together. We used to think STEM jobs were you became an electrical engineer, you became a computer scientist. Not the case. Lots of folks who are majoring in history are actually out there doing STEM jobs.
This was really fun. And I feel like any of us, well, I think you certainly, a bunch of adults you resonated with, and any of us who have kids, it definitely resonated with.
Wait, we have 20 seconds left. Who did it better teaching math at the university level, Brown or Harvard?
Brown.
Ooh, well done. Well done. Shalini, thank you so much. Good luck. Look forward to catching up with you again in the future. Shalini Sharma, she's CEO and co-founder of the nonprofit educational software organization Zern. Her new book, check it out. It is entitled Math Mind, The Simple Path to Loving Math, Cracking the Numeracy Code for Everyone Who Has Ever Thought They Were Bad at Math.
Cool. Very cool.
I love it. I love math.
I love math.
I do too.
Actually,
I love math too.
Yeah.
All right, everybody, this is Bloomberg.
Company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Bumble shares, they are plunging 25% after the dating app slashed its annual revenue outlook. It says annual revenue will grow between 1 and 2% from the previous year. The company had previously forecast growth of between 8 and 11%. Airbnb plunged today by the most ever after the company issued yet another disappointing outlook and warned of slowing demand from U.S. vacationers. Airbnb shares today did drop by 13.4%. Rivian Automotive maintained its full-year vehicle production target and profit-making goal, but warned of a looming plant shutdown next year to prepare for a new vehicle launch. RJ Scaringe is Rivian's CEO, and he spoke with Bloomberg Television about the quarter.
In the second quarter, we went through a big refresh to the product where we've now launched what we call Generation 2 of that vehicle, of the R1T and the R1S, where we made significant improvements in the product, but also took a tremendous amount of cost out of the vehicle.
Rivian CEO RJ Scaringe speaking with our Matt Midler and Ed Ludlow. The company says it does expect to produce 57,000 EVs in 2024, unchanged from prior projections for this year at about the same volume as in 2023. Tough day for the Walt Disney Company after earnings. Disney down 4.5%. It did give a mixed picture as it reported third quarter results. Weakness at its theme parks offset its first ever profit in streaming. Super Microcomputer plunged today after reporting quarterly revenue and profit that missed analyst estimates, outweighing an annual sales outlook that was billions of dollars above Wall Street projections. Super Micro down today by 20%. 5.1%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenbeck on Bloomberg Radio and Television.
All right, we're going to wrap up soon on Bloomberg Business Week. Before we do, though, let's get another update on world and national news. Off to Amy Morse we go in D.C. Amy.
All right, thanks, Carol. Vice President Kamala Harris stepping up efforts to bring rank-and-file union members in swing states back to the Democratic fold, with Minnesota Governor Tim Walz as her running mate after their first joint rally in Philadelphia last night. Now they're in Eau Claire, Wisconsin. Walz just finished talking about Harris's career.
She took on predators, fraudsters, transnational gang members. She stood up against powerful corporate interests, and she never hesitated, not once, to reach across the aisle if it improved people's lives.
They'll be in Detroit tonight. The Trump campaign also holding events in key swing states. Donald Trump's running mate, Ohio Senator J.D. Vance, also in Wisconsin, trying to appeal to swing state voters.
It's not just that we could be doing so much better. We were doing so much better when Donald J. Trump was president of the United States. We had somebody who was fighting for American manufacturing, American workers, and fighting for their jobs.
Earlier, Vance visited a Michigan police department to talk about what he sees as failed immigration policies. Ocean temperatures in the Great Barrier Reef reached the highest they've been in 400 years over the past decade. Research published in the journal Nature shows researchers from Melbourne University in Australia were able to compare recent ocean temperatures to historical ones dating all the way back to 1618. They found mostly stable temperatures until about 1960, and then they started steadily warming up. The scientists warned the reef will not survive if planetary warming isn't stopped. And the Summer Games in Paris continue through the week. At last count, now last time we talked, they've already gained 3 more medals. I'm talking about the U.S. Now with the most medals with 94. China has 65. France has 49. And now the U.S. has the most gold medals with 27. Global news 24 hours a day whenever you want it with Bloomberg News Now. I'm Amy Morris. Back to Bloomberg Business Week with Carol Masser and Matt Miller.
All right, Amy, thank you so much. Carol Master along with Matt Miller. And yes, if you look at the most read stories on the Bloomberg, a lot of it has to do...
Do you do 8 hours or do you do 1 hour?
I go back and forth. So I do... Okay, so, but go to 1 hour.
Okay.
And there's a really interesting story. Yes, if you go to the most read, there's stock swoon after a weak $42 billion treasury sale. There's a story about fast money quants are hammered after everything went wrong.
I know where you're going.
And then you go to
this.
number 5.
Steve Jobs' boat, Mexican billionaire.
I need
yacht.
a little break, a mental break.
Yeah. Amazing. So Venus, right? Have you ever seen this boat?
No, I have not.
It's Steve Jobs, obviously the late founder of Apple.
Right.
His boat, designed by Philip Stark.
It's like a floating land.
Philippe Stark.
Philippe Stark.
So famous furniture designer. I feel like
he did a lot of Beneteau. I think he did Beneteau yachts, French yachts. Yeah.
I feel like Kramer had a Philippe Stark dresser that he slept in for a while in Seinfeld. Do you remember that episode?
I'm looking.
No. Okay. In any case.
Here, you continue with the story. I'm going to Google.
So this is the yacht of Steve Jobs. Apparently it got into a fender bender, a minor accident in Naples with Lady Morna, which is a luxury vessel owned by Mexican billionaire Ricardo Salinas Pliego. So Salinas is vacationing off the Med. I'm talking about Naples in Italy, not Naples in Florida.
Right.
And he posted a video on Twitter, which you call X, showing Venus kind of slowly drifting towards his yacht. Probably like, hey, cool, that's Steve Jobs' yacht, designed by Philippe Stark. His crew was freaking out. They're yelling, they're whistling, they're worried about a collision, and I guess they just couldn't stop it.
Yeah, exactly.